What's going on, guys? It's Bandit FX, and in this video we're going to be covering Fibonacci, specifically the Fibonacci retracement tool. So what is Fibonacci? Who created it? How is it calculated? So Fibonacci is basically a series of numbers where you add two of them together to get the third number, and then the two last numbers after you find a new number are added together to find the next number. It was created by somebody called Leonardo Bonacci, who was an Italian mathematician. This is many, many years ago. If you guys want to get into that and learn all about that, go ahead and Google it because there's a lot about it. It forms in nature, things like that. So let's talk about the Fibonacci sequence. Like I said before, it's two numbers added together to get a third number, and then those last two numbers are added together to get the next number. For example, it starts with 0 and 1. You add 0 and 1 to get together, you get 1. You add 1 and 1 together, you get 2. You add 1 and 2 together, you get 3. Add 2 and 3 together, you get 5. You add 3 and 5 together, you get 8. So on and so forth. That's the Fibonacci sequence. Not really super relevant to what we're talking about here. I just want to give a little introduction of what it was. Let's talk about the Fibonacci retracement tool. So bringing out the Fibonacci retracement tool here, you're going to see that there's all of these numbers. These are actually percentages. This is this is a retracement tool, so obviously this would be a 0% retracement. This is the end of the move. This is the beginning of the move. This would be a 23.6% retracement, 38.2% retracement, 50% retracement, which actually is not a Fibonacci number. All these numbers are based on Fibonacci numbers, but the 50% actually isn't a number, or isn't a Fibonacci number, but the reason that it's in here is that it does act as support and resistance as well. So with that being said, this is kind of the purpose of this tool, is that these Fibonacci retracement levels are areas where price is more likely to find a support or a resistance depending on if you are in an uptrend or a downtrend. So the 50% on there is because it's just a psychological level, but continuing down, the 61.8% retracement, a lot of you guys know this as the golden zone. This is where you're going to see price retrace in a healthy trending market. And then the 786 and then the full one retracement. This is basically retracing 100% of the initial move up. So let's talk about each one of these levels and basically what they mean as far as what type of trend we're in. So let's say price starts here. Obviously, we have the move upwards, and we only tap the 23.6% retracement level, and then continue. What this isn't even a full-on retracement. I don't even consider this as a retracement. A lot of times, you're not even going to see this get hit once. If price doesn't break below the 236, a lot of times what you're going to see is a consolidation before a continuation up. And basically what this is this is literally just a continuation level. This isn't even, I wouldn't even consider it a retracement. The first retracement level we're going to talk about is the 38.2%, but I do want to mention this area because I would not be taking any buys off of support in this area. Off of the 236 level, I'm going to be waiting for a breakout. So I'm actually going to draw this a little bit better to show you guys what is more likely to happen if we are coming into this level and not breaking below it. So price will come up and you'll see price range in here for a while. You get this little consolidation phase before continuing up and going where it needs to be to continue the trend. So with that being said, this is a continuation level. I'm going to write this right here. Continuation zone. So if we don't break below the 236, that's a continuation zone. Let's talk about the 382. So if price is coming up to this level, we have our swing low to swing high, and then we come down to the 382 fib and then continue on. Now, this is a very strong trending market when this happens. Price is coming down. It is retracing. It's retracing only just a little bit under 40% of the move and then continuing. This is a very, very strong trend. Now, this means you will more than likely get a much bigger move to the upside when this happens. However, you do have to keep in mind that when this happens over and over again, you kind of become overextended in the market. And what I mean by that is that price really hasn't had a full-on healthy retracement on higher time frames. So the chances of a much more aggressive pullback on a higher time frame is more likely. So we're going to call this a strong trend continuation or a strong trend retracement. This is what you're going to see in a very, very strong market. So I can't spell. Okay. Um, so we have a strong trend retracement here at the 382 level. Now, the 50% level, yes, I keep it on there because you will see a bounce off of it, but more often than not, if it comes down to this level, it's going to go to the 618. You will get a wick that just about touches the 618. So we're just gonna mark this down as a psychological level. All right. Okay. Now let's talk about the golden number, the golden zone, the 61.8% retracement. When you get price coming down to this level, this is where most people who swing trade, most people who use Fibonacci, this is where they're taking their entries or at least looking for an entry. I'm just going to draw this out one more time. We have the impulse move up, the retracement to the 61.8, and then the continuation. Now, the difference between this and the 382 is that this is a healthy retracement. Price had its impulse move up and had, a very, very healthy retracement. Price can continue up in this fashion for a very long time. As you can see, here, we'll talk about it on the real chart in a little bit, but the 618 retracement is a very, very strong level. This is where you're going to see a lot of times you're going to see a lot of bottom wicks come down into this level, a lot of rejections to the downside, and that's your kind of signal to enter. We're going to talk about take profit and stop loss placements after this, but this is where you're most likely going to be looking for entries. If you're taking an entry off the 382, like I said, it is a strong trend retracement. You can have a much larger move, but at the same time, you do have to keep in mind that there is a very strong possibility that we're coming down to the 618 level. So more often than not, if I'm trading, if I'm using Fibonacci and I'm not correlating it with anything else really, and I don't have any too many other confirmations lining up with this, but I am getting a consolidation down here or rejections to the downside. I'm really only looking for trades at the 618, not the 382. If that starts to happen at the 382, we get that little consolidation, and I don't see a strong support level down or over here to the left, then I'm not really gonna want to take that trade because there is a risk of it breaking to the downside. So let's write down that this is the healthy retracement. Healthy retracement level. Oh, whoops. Healthy trend retracement. There we go. Now, if we do get a pullback to the 786, this level is when you're going to start to see a little bit of buyer's exhaustion if we're talking about a trending market to the upside. By the way, Fibonacci works the best, and I would only advise using it in a trending market. If you are ranging, do not draw this. This will not help you at all. If you are in a complete range, there's no point in drawing Fibonacci. They're not gonna; those numbers aren't gonna help you. The only number that may help you is the halfway point, which is the 50% mark. You may see a bounce off that level, but yeah, unless you're in a trending market, don't even bother with this tool. It's going to do you more harm than good. I can guarantee you that. So back to the 786 level. if we come down and we form a support here and we actually do start continuing back up, keep in mind that this is showing buyer's exhaustion. We retraced basically almost 80% of that move upwards. Chances of price continuing after that for much longer are slim. Buyers are losing momentum. The sellers are starting to step in. You could see this start to flip on higher time frames. So let's mark this down as a weak trend retracement. Okay. Now, this level, which is a 100% retracement, is obviously a complete reversal. So if you have a move to the upside and it retraces the full move, that is a 100% rejection. That everything that the buyers just did to push price that high has been completely wiped out by the sellers. The sellers are now in control. So if you guys want, take notes, draw this, take a picture, whatever it is. But this is basically what we're going to be basing everything off of. So I'm going to give you guys a second to pause it. All right, so let's talk about it in the real world. So this is US 30. Obviously, we know US 30 has been on an uptrend for just about 99% of its life. Let's start talking about swing highs and swing lows, where to draw the fibs, how to draw the fibs on real price action. So we're going to look at a higher time frame. Let's just look at, let's see, not the weekly, too high, daily. Look at the daily. We're just going to find the most recent price action, right? And we're going to look at a couple different types of retracements and see what happened. Obviously, we're in an uptrend. We're making higher lows, higher highs every step of the way. Price is continuing upwards. Fair to say that. Let me just get rid of this again. All right, so let's start with this move. From this swing low to this swing high, we're going to measure this retracement and see what exactly happened here. So taking a look, let's pull out the Fibonacci retracement tool. We're drawing from the bottom of the wick, right? The bottom of the move to the top of the move, right? We're drawing this. You're going to see price came all the way up, tapped into this level, and then broke down. Now, with this being said, I'm going to talk about this, and then I'm going to talk about the 236 level, which you're going to see here in a second, where I meant like a continuation. So price came up, made the high, came all the way down, and we kind of started trending on lower time frames. This would basically be ABC of an Elliott wave. We're not going to talk about that, but this is just an example of price retracing, and you're going to see those rejections. So we have the rejections on the daily time frame. Let's see if I can find this on a lower time frame so you guys can see those rejections and what they look like for an entry. Obviously, we came down to the 618 level. Remember what I said, if we're going to bounce off the 50%, chances are we are going to see those wicks come down to the 618. This is what I was talking about. You have these two wicks on the daily time frame coming down to this level. So let's go down to the 4-hour and see if we can find this move. Okay. So yeah, basically price came down right to the 618 level. We had this one major rejection. Price started consolidating a little bit, and then you had this breakout candle to the upside. This would be your entry candle once you started to see the top of this range break on lower time frames. So now that's just an example of what you're going to want to look for is when you're using Fibonacci, the best way to go about it is Confluence Trading. Look for other things that line up with it, whether it be a trend line, whether it be support and resistance levels, whether you notice price action starting to flip the other direction to continue the move upwards on higher time frames, whatever it may be. The more things that you can kind of check off your checklist as far as what lines up with the Fibonacci level, the higher probability that that trade is going to go in your favor. Obviously, the more things that line up with each other, the higher probability of success. So Let's talk about the 236 level, like I said before, because obviously before this big spike to the upside, we didn't have that. So let's see what happened here. Let me just delete this and move this down, right? So drawing from obviously the move downwards all the way to this move upwards. We broke the high. Now that's the key. In order to draw Fibonacci, you have to be trending. So if price is coming up here and we create a lower high and start to basically retrace, you can't draw the Fibonacci from the bottom to the top. You would have to draw the swing high to the swing low, because now with a failure to break that high, price is no longer in an uptrend. Price is starting to flip and be in a downtrend, so we have to see, okay, what level did this stop at in regards to the bottom side? But I'll show you guys that in a second. Let's talk about the 23.6% retracement, like I said before. Price came up here, started consolidating. Notice that when we did make that high, we didn't break below this level. This was a continuation for the upside, and then we had that big rejection. Now, this doesn't, I mean, typically you'll see price move a little bit more than this to the upside when you get that 23.6% pullback. But one thing I kind of want to talk about is that I see this more often than not in the markets, and just let me know if you guys see this too. You know, once you guys get what I'm saying, take a look at whatever pair you trade, and you'll notice this. Now that I mention it, is that price will come up and then consolidate like this, and then continue the move before then retracing, and then obviously continuing in whatever favor it is. But what this basically is that initial impulse move, the consolidation phase, and then another, like the continuation, before you get the actual retracement on higher time frames. And that's basically what that is. I mean, you can see it right here. This is a perfect example. We had a push to the upside, small consolidation phase, and then the continuation. So that's just something I wanted to mention. You guys will see that. And basically what that is price not breaking below that 236 level and then continuing the overall move to the upside before then making that full-on correction. But let's say price did not break. Let's say this was the peak, right? Let's say price didn't continue here and then we started going down. I want to talk about where you guys should not draw the fibs basically to the upside and start drawing them the other way. And obviously that's within a downtrend, because as you can see, price is making higher highs, higher lows. If this ended up being the high, right, and price then continued down here, whoops, I always get messed up with that tool. But okay, so we had price come up and then continue down. On this time frame, what you're gonna do is draw from that swing high, which okay. So just to make this easier for you guys to see, let's say this support level turned resistance and price continued down. This is what we were talking about. Now, the fact that we had a failure, right? We had a failure to break this high. Now what you're going to be looking for, right? This is the high. If we had a high here, and now we had a high here. Now you're obviously seeing some sort of a head and shoulders type pattern. Now what you're going to be doing is drawing that fib level from the top, the swing high, to the swing low, which looks something like this. Swing high, swing low. If price were to continue down, obviously, you saw that little consolidation area, right? If we were to break down to that downside, this is exactly where that little move happened. Remember where I made the example over here? If we were to break it down to the downside, look exactly where that happened. The 618 level retracement, which, like I said again, is a golden zone. 618 lined up with a previous support level, a previous resistance level. You have all these confluences basically to help you better off gauge where price may be headed. But also, with that being said, this is why you have to wait for a confirmation. You can't just wait till this level is hit, right? Because in theory, right, we had a low formed here. I mean, even though it's on a much lower time frame, right, and that's not the overall swing low, um, this low is lower than this one, right? So we had this kind of double top made. We had this low formed, which was under this. You may be thinking, oh man, maybe we have this, maybe we're flipping bearish, right? If we come into this level, if you had already drawn this fib as a bearish fib and we came into this level, right? And you didn't wait for a confirmation for price to break down um, and give you that bearish signal, you would have gotten wrecked, like absolutely wrecked in this trade. Like without question, price just flew right through your stop loss, and you took the full L. So confirmations, guys, that's very, very important. Not only is Confluence important as far as lining it up with other things, you have to you have to wait for a confirmation. I couldn't tell you how many times I see traders take trades as soon as the 618 level gets hit, it's all of a sudden just I'm entering the trade. I don't care. I didn't even look at anything. I don't care what price is going to do. I'm entering, and there's a probability that I'm right. I'm getting the best entry possible. Yeah, well, that's great. That may work sometimes, but you're not going to be profitable like that in the long run. I can guarantee it. You have to wait for that confirmation. So, um, on to the next topic. Basically, what Fibonacci is used for. We just talked about um, the most widely used reason to use Fibonacci, which is entries, right? It's very, very simple. You're looking for an entry. You're drawing from swing low to swing high. In a bullish market, you're drawing swing high to swing low. In a bearish market, or bearish trend, rather. Um, but not only is it used for entries, but you can also use Fibonacci as targets as well. And basically, you're going to see, we're going to draw these same fibs, right? You have these extension levels. And the three main extensions, I'm going to move this over so you guys can actually see the numbers. The three main extensions that I use are the negative 27.2, the negative 41.4, and the negative 61.8. These are take profit targets that, just like the retracement levels have a high probability of forming support and resistance, these extension levels do as well. So that's typically where I'm setting my targets. Now, this is not the only way to find targets with a Fibonacci retracement. Um, this kind of gets a little bit more complicated, but once you kind of grasp the concept and how to use it, it's very, very simple. But what basically you are trying to do is you're trying to use a lower time frame, um, a lower time frame Fibonacci entry, right, in order to catch a move that's counter trend on a higher time frame. Now that may kind of sound weird at first, but if I show you an example, you'll see what I'm talking about. So we're going to use this example again, and then we're going to break it down to lower time frames to see where we could have found an entry and where we could have found our full take profit, right? So, or basically ideas of where price could get rejected. So let's draw the same fib that we've been using in this entire example. We have the impulse move to the upside, and we start the correction. Now I'm going to draw a box around this so we know what price action we're looking at on the lower time frames, and see if we can catch a counter trend move here um, on lower time frames. So looking at this, I mean, I already see one, but we're not going to talk about it. You could see, like right here, we had this move upward, that little consolidation, and then this fully got rejected. This bearish engulfing candle made a higher high, came all the way down, made a lower low, closed below the previous open, closed below the previous close, basically engulfed all of these candles to the left. Very, very bearish signal. This is the start of the retracement, right? So let's go to the 4-hour and see if we can find anything. Whoops. Okay. Do we see an entry on the 4-hour time frame? Yes, we do. Now, where is that? Um, like I said before, we had this consolidation phase. This was a 100% rejection. This entire move got wiped out, right? So once you see that this entire move gets wiped out, this push up, 100% retracement, now buys are no longer valid. Now we're waiting for a pullback or we're waiting for a low to break. Basically, you have this range here. Let's just draw it out, right? We had this range that formed, top of the range. Now this is how you would do it in like a live market, basically, or live market conditions. Price was coming up, we started ranging, we broke out, rejected. So this was a fake out, right? We broke to the upside and then completely came back down in the range. And if you guys know one thing about fake outs is that if we fail to break out in one direction, meaning we came out of the range, closed out of the range, and then immediately after came right back into it, more often than not, price is going to reverse and go in the other direction, which in this case, it did. But with this low being broken, obviously, we're going to wait for that retest. Price came right back up. Now, if you're drawing the fibs here on lower time frames, right? You're drawing from, because obviously now we broke this low. We broke the low of this range. We're coming back down. I'm going to go ahead and get rid of this higher time frame fib so you guys can see this a little bit more clearly. We're coming down, full retracement. Same thing that happened up here on the daily time frame. You know, if you rewind the video a little bit, you saw this daily candle come up and then that bearish engulfing. It's happening here on the 4-hour. So now you know that this is the end of the 4-hour move to the downside. You know, huge rejection. We're starting to come back. Look what happened with price. Look exactly where we started to see this consolidation. We started to see all these rejections at the top of this range. And then at the end of it, big bearish engulfing candle and a close, and then start to break the low of the range. This is where you see your entry. You know, this is where you're getting your counter trend entry to have price continue, which came basically to the negative 27.2% extension. You can even see this on lower time frames, you know, even lower than this, you know, to catch a counter trend move. Because obviously, if we know, right, let's go back to the daily and redraw that fib. So let's redraw this, right? If we know that the 618 level or the 0.5 level, right, or then we're gonna draw both of them, you know, just so we're aware, right? Because like I said, you're gonna get that psychological bounce sometimes off the 50%, and then I'm gonna delete this fib so we don't see anything else. If we know what those two levels are and we know where those levels are, we can identify them on lower time frames and be able to make decisions as far as where price may reject very, very hard. So we came into that 50% level. That's where the end of the 4-hour move was. We came up. We had our rejections for the 618 to the downside on the 4-hour time frame, and then price continued down. But where did it continue down to? The 618 level, which just so happened to be the 27.2 or negative 27.2% extension. This is where you guys are going to want to be securing profits. It's not always the same for every trade, but just keep in mind that, hey, if we're going to have this massive rejection, it should happen here. You know, if price is going to completely reverse, it's going to happen here. So let's break it down to the 1-hour time frame and see what we can find. Let me highlight this in a different color. I don't even know how to do this in a different color. Whatever, we're gonna do it in the same color. All right, so let's talk about this move. Right, going down to the 1-hour time frame. Okay. This was that daily rejection we had, right back down into it. Now you're going to see opportunities for more entries, right? So we know the 4-hour came down. This was the 50% retracement level. This was actually the 382 on the daily fib that we drew, right? Which is the top of the range, ironically. So when we came down here and we broke these lows, now you have a fib entry right here on the 1-hour time frame, right? And where does price reject off of? The 618 level. So this is kind of giving you an idea of how you can scale into positions on multiple time frames and be able to take advantage of all of them. So you're going to see here we had this range. We're going to draw the bottom of this range right here on the 1-hour time frame. Rewinding back basically to the 4-hour rejections that we saw, or the consolidations before we had that bearish engulfing. This is that move. This is what that is. But on the 1-hour time frame, what you see is a very nasty range. However, price continued to the downside. We formed that low, which we saw the rejection, came up, and then rejected the 618 again, which just so happened to be the bottom of the range. So this is just a retest. Right after we had those rejections and this candle low broke on the bullish candle low broke, huge move to the downside. So this is what I was talking about as far as being able to use it as profit targets. So not only can you use Fibonacci for entries, not only can you use it to gauge how strong a trend is, not only can you use it for scaling into positions, but you can also use kind of a multitude of time frames together along with Confluence to find where those lower time frame fibs are going to be rejected, where you're going to see a lower time frame flip, right? Because somebody who is just blindly saying, "Oh, I trade the 1-hour time frame fib," you know what I mean? The guy trade fibs, but I use the 1-hour time frame. I'm a swing trader on the 4-hour time frame, whatever it is. If you guys don't use the higher time frames and draw those higher time frame Fibonacci levels, you're not going to know when that's going to end. You know what I mean? Like you're going to catch that. You're going to catch a couple moves here and there, but when you come into the daily level, right? You're coming into a daily 61.8 retracement level, and you think that, I'm going to take sells right here, right? Because then we had this. Let me draw this next example. This is what not to do, right? So we have the 50% daily, which is this orange line, and the 618 on the daily, which is this orange line. You're taking a look at, let me delete all of this. And so you're taking a look at price was ranging, right? And then we had the high, a swing low, a swing high. Now we're breaking the low right here. This means that this is like a continuation, whatever. Actually, no, right here. So swing high, swing low, swing high, swing low, so on and so forth, right? Drawing it. Let me get rid of these. We don't need these here. These are irrelevant to what I'm talking about. I'm just going to keep this support here so you guys understand where I'm coming from, right? So catching this move makes sense. 618% retracement. We broke basically the structure here. Had a couple rejections and price continued down. Now, remember we're talking about this being the end of the move. Once we get a full 100% retracement is the end of the move, we're going to see that, right? At this point, the 1-hour time frame is still in a downtrend, right? So you can line everything up. This is the importance of higher time frames, right? I'm just going to line everything up for you guys so you guys can see if you guys don't use these higher time frame fibs, you guys are going to take unnecessary losses. Let's just say you're looking at this on a 1-hour time frame. You're like, okay, price ranged here a little bit. We broke the lows. We made a lower high than the previous. And then, we came down here. We made this lower low. Whoops. Made this lower low down here. 100% retracement of this move, of this candle, and then we started to come up. Okay, now I'm going to draw my fibs. You know, we're getting ready to hit the 618 entry, which is in line with, you know, this previous support, right? So you have a support here that broke. You have the confirmation that this is the end of that fib, or the impulse move, right? So you draw your fibs out. You're like, okay, where is price going to move? Coming down. We start to reject off the 618. Now, if you take buys here, or I mean, if you take sells here, right, you are making a big mistake. And the reason for that is that you're anticipating that price is going to continue to the downside. But if you're not looking at the daily time frame and the overall picture, because you guys got to remember that the higher time frame always rules. The higher time frame has more say in where price is going to move than lower time frame. This is just noise, right? This is just a little bit of a consolidation. I don't even think you could see this on the daily time frame. This is just a wick on the daily time frame, right? Those two wicks that we saw on the daily, that's what this is. Um, what you're seeing if you're only looking at one time frame is, okay, we have a bearish candle, we broke the low, yeah, it's perfect entry, right? Even if you get an entry up here at the 786, what happens? Price completely reverses and you basically get slaughtered. And the reason for that is because you're not looking at multiple time frames. So let's see, where can we catch a crazy buy entry? On the daily time frame. Let's say you are doing this right. You know that this is the 618 level on the daily. You know this. You know, price can be coming up here. What can you do, right? So let's get rid of this fib. Let's get rid of all this. All we're looking at right now is this huge rejection, right? Okay, you're starting to see price consolidate. So let's draw this out, right? Massive rejection. We know that's the end of the move. We know that that is the end of the move. When you see this happen, the chances of price continuing down, very, very slim. Even if you draw this fib, right? Actually, no, it's to here. Because the full retracement. You have this rejection off the 618. You have this rejection off the 618. Price continues up. Draw from here, multiple rejections from the 786. Even though, like I said, at this point, price is ranging. You can't even really use a fib here. Even the first one, I wouldn't even recommend it, you know, because you don't know how far price is going to retrace. But you can anticipate it because we had this full correction, 100% retracement. If you break this down to the 15 and a 30-minute time frame, you're going to see a 100% correction, just like we saw on the daily time frame and the 4-hour time frame. This just happens to be a 1 hour. This happens on every single time frame. But at the same time, if you can correlate all these time frames, you know we are on a daily support level, a very, very strong daily level. We should not be looking for sells right now. We should be waiting and getting a confirmation for something. Like this is my word of advice when it comes to using Fibonacci, and if you see this level start to get tapped into. If you start, if you're trading the 1 hour fib entries, you're catching these retracements, you're buying support, selling resistance on these pullbacks basically, and you start to come down into a daily level like the 618, the golden zone on the high time frame. Just avoid trading it. Don't try to trade it. There's no reason to take that possible, like, it's because then at that point, think about it like this. Forex trading and trading in general is all about risk management. That is the number one thing you guys got to be focused on, right? Preserving your capital should be the number one thing. Having the most high probability trade should be your main goal. Why would you try to short something that just retraced in an uptrend on the daily time frame to the 61.8% retracement level. It doesn't make any sense. So what you do is you wait to see what happens on higher time frames. When you see the fact that, price is still making higher lows on the 1 hour, right? Once we break this high, now you know. You know what I mean? Now you know, okay, we are coming back out of this. I could take my entry, which, I mean, I'm going to mark this level off right now. Once this high gets broken, right? Because we had that rejection, we had this full retracement, price formed that support, couldn't break the low to continue. And then we actually invalidated that this 1 hour fib setup. Let's see where this is on the daily time frame, which is the highest orange line. Wow, this is messy. Get rid of this. Okay. So where is that? That's the 382. This is how you get a better entry, right? Even though we tapped into the 618, and you saw that rejection, and then this one, um, basically the fact that you're breaking back above this and you're invalidating this previous smaller time frame setup, you can catch a much better entry than missing this move altogether, because it would have been very, very hard to catch this move on a daily time frame. I mean, unless you were catching that this right here. If I can find it. Unless you were trying to trade this move when we had that huge rejection and you just took an entry without like any real like stop loss placement, unless it was below the 618, you couldn't really find an entry on this. This would be your next best entry, which, I mean, using fibs doesn't have to be, oh, I'm entering on a fib level, or, your trade is based on a fib level. You can use it to just gauge where price is going. And that's like one of the benefits that people really don't utilize with Fibonacci, is they think it's just, I'm trading the golden zone and that's it. No, you use it to see where price is headed on higher time frames, where it's headed on the lower time frames, how you can catch entries on lower time frames, and then where it is going to reverse on those lower time frames. So this, as far as taking just a basic price action breakout trade, when you see this level get broken, like this upper wick here get broken, this is a huge potential trade, because now you rejected it on the daily. We're coming up on the daily time frame. We invalidated the 4 hour, we invalidated the 1 hour, and now we're coming up. On top of the fact that this is US 30 and this thing has been on a permanent bull run since the day it was born, it's a no-brainer. You know what I mean? Like, this is an infinite win trade, with like a minimal stop loss. So that's some of the ways you guys can incorporate fibs into your trading. One last thing I want to go over is entries and take profit points. I have mentioned this before in some of my other videos, but I'm just going to briefly touch on it. Like I said, the 23.6% retracement is a kind of a continuation level, so I'm not really taking trades in there. I'm waiting. I'm just knowing, like, hey, this is probably the halfway point of the overall move to the upside. I'll wait for a breakout in order to take a trade. The 38.2% retracement. Now, if I'm taking a trade here, it better be in line with very, very strong support. I better be seeing a lot of rejections, and I have a very strong confirmation that price is going to continue up, because usually this isn't as respected as the 61.8 level. I will not take any entries on the 0.5 fib, because just in my personal experience, when I do, I see a couple rejections there, I take an entry. What'll happen is we'll get rejected at the 382 and then continue down to the 618. It's basically just a lower time frame pullback to the upwards in order to continue that lower time frame push to the downside until we do reach the 618 for the higher time frame fib. So my main entry is going to be at the 618% retracement. When I do enter here, I'm placing my stop loss below the 78.6% retracement because, I mean, honestly, like a quarter of the way, just like right here. Chances are, if we are coming down here, bulls are losing momentum anyways. Obviously, just flip it if we're talking about a bearish scenario, but we're losing momentum. Chances of us continuing really aren't that great. If I do happen to catch an entry directly on the 618 level, like on the line, my first take profit is going to be at the 23.6% retracement. And the reason for that being is that if you pull out the long position calculator, you're going to see exactly what I'm talking about. We have a stop loss here, and then right here. So we have already over a 1.5 R, right? If we're talking, even if it's halfway, right, or about a third of the way below the 786, you're talking almost a 1.5 R right here in general. And this all depends on how confident you are in the trade, right? The more things you can line up, like for example, if we were rejecting off that daily 618 level, like the example we've been talking about this entire video, if we're rejecting an area like that, obviously I'm not going to be closing here because I know that there is a much higher potential for price to continue much, much farther on higher time frames. But take profit 1 is going to be here. Take profit 2 is going to be at the high because there's always that possibility of a double top forming, right? If we had a swing low, swing high, like this is what can happen. Swing low to swing high, we retrace the 618, and then all of a sudden we have this double top, right? You gotta be able to factor in or secure profits at every possible scenario. You can't always think, oh, this works every time. I'm always going to be right. Blah blah blah. Whatever. So this could happen, which is you have a double top form. Let's talk about my reasoning for the 23.6% target. In this case, we have a lower high form, which is, what is that? When we have a lower high form and price starts to continue down, that is showing, hey guys, guess what? This is starting to flip bearish. We just made a lower high. All we need to do is make a lower low to confirm it. And if we do make a lower low, we're breaking below our entry. So as soon as we hit this level, I'm taking something off the table, stops or a break even. No question. That's it. End of story. This is the other possible scenario. This is take profit 2. Take profit 3 is going to be at the negative 27.2% extension. Take profit 4, 41.4%, and the fifth take profit will be at the negative 61.8%. Obviously, providing they all line up with structure. But yeah, guys, I hope this video really helped you. Please leave a like, leave a comment. If you haven't already subscribed, let me know if you guys like these educational videos or what topics you want me to cover next. I always look through my comments. I would love to post a video on one of your guys' requests. Once again, I'm going to leave my Bandit FX Discord link in the description. Feel free to join. We have almost 500 members now. As I mentioned before, as soon as the Discord reaches 500 members and the YouTube channel reaches 500 subscribers, I am going to host a giveaway. I'm going to be giving away, I don't know how many yet, but a couple Bandit FX courses and a few digital magic keys. And there is the possibility of me offering kind of a one-on-one coaching with somebody, but I haven't decided 100% whether or not I'm going to do that yet. But yeah, guys, if you haven't already joined the Discord or haven't already subscribed, please do. Let's get this giveaway rolling, and I will see you guys next time.